Welcome to Old Square Tax Chamber's Tax Snax, a series of short talks that give you all the basic information you need to know about tax topics. Today I'm talking about the government's Freeport proposal in the 2021 budget and what that means for taxpayers. The idea of establishing Freeports once the UK had completely left the EU has been trailed for some time, with the government publishing a consultation on the proposed policy in February last year. The stated aim of such a policy is to support the policy of levelling up the towns, cities and regions of the UK. However, and particularly post-budget, what is particularly interesting is not the policy basis for the proposed legislation, but what tax benefits the legislation is likely to confer, which was initially confirmed in the consultation response of October 2020, and secondly, the location of the Freeports, which were announced at budget. Taking the first of these, the government proposal, and it should be said at this stage, only parts of the proposal have been fleshed out by the documents following the budget, is essentially in two parts, the first being customs and duties and the second tax. In outline, there will be an area or areas within a Freeport that will be designated customs sites, and the area of the Freeport itself will be designated a tax site. Businesses operating in the Freeport customs sites will, apparently, be able to access a range of benefits and new opportunities to boost their international competitiveness and take advantage of customs and tariff benefits, including simplified customs procedures to access Freeports and duty suspension while goods remain in the Freeport. That's two quotes from the government consultation response. Three of the benefits referred to in that response are duty deferral, duty exemption and duty inversion. The first of these, self-evidently, simply allows duty to be paid at a later date, rather than on the entry of the goods into the Freeport. This is not dissimilar to an existing scheme for excise warehouses, which allows certain businesses to operate a duty deferment account, and this means they can make one monthly payment instead of a payment on each consignment. It's not yet entirely clear whether the Freeport scheme will operate in exactly the same way, or whether deferment will apply at all times when the goods remain within the customs site. That's clearly something that we still need to have fleshed out. Turning then to duty exemption, this is likely to take the form of exemption on goods that are imported into a Freeport, processed into finished goods and subsequently re-exported. Again, however, the details of this remain to be fleshed out. Finally, duty inversion will apply where goods are produced from components on site and the finished product, on leaving the site, attracts a lower tariff than the component parts. In addition, there will be suspension of import VAT paid on goods brought into the customs site until they leave to enter the UK domestic market. So we don't have an awful lot of details of the customs measures, however, we do have a good overview of what they're likely to entail. They're not dissimilar to some measures that are already in existence, however, they should offer additional benefits to those on the customs site in a Freeport area. So let's turn now to the tax implications of being in a Freeport area. These focus on the following areas: SDLT, Structures and Buildings Allowance, Capital Allowances, and Employers' National Insurance contributions, as well as business rates. Obviously, this covers a substantial range of taxes and could offer a potentially significant benefit to new investors in Freeport areas or existing businesses in Freeport areas making the correct type of new investments. I'm now going to look at each of these in turn. And again, it's worth remembering that we don't have that many documents post-budget that help us with the details of these things. So this is going to require some more careful thought later on. In relation to SDLT, this will take the form of a relief from SDLT on land purchases within Freeport tax sites where the property is used for qualifying commercial activity. This relief, like most of the Freeport measures applying to tax, is going to be a temporary one and is slated to take effect from the 1st of April 2021 and to end on 31st of March 2026, though that deadline could be brought forward. The relief will also include a clawback where the land is not used for qualifying purposes within 3 years of purchase. However, notwithstanding the clawback, this could be a very significant attraction for investors in Freeport areas. Turning then to structures and building allowances, the intention is to provide an enhanced SBA rate which will enhance the relief for construction or renovation of non-residential structures and buildings within a Freeport tax site. Now, the way that this relief is described is as accelerated, and what is proposed is to allow businesses to reduce their taxable profits by 10% of the cost of the investment in each year for 10 years. That compares with the standard SBA position of a reduction of 3% each year for 33 and a third years. So you can see how it can accurately be described as an acceleration. Again, however, this relief is only available for a restricted period, so that it can be claimed where all of the qualifying expenditure is incurred, associated construction contracts signed, and relevant assets brought into qualifying use between the 1st of April 2021 and 30th of September 2026. Additional restrictions, including the existing capital gains and anti-avoidance provisions, are going to continue to apply to the enhanced relief. Turning then to capital allowances, the proposal here is somewhat similar to that for the SBA, i.e. an acceleration of the existing relief so that taxable profits can be reduced by the full cost of investment in new plants and machinery where it is used primarily within the Freeport tax area. The reduction will be allowed in the same period as that in which the cost is incurred. Again, the existing rules that apply to capital allowances will continue to apply, in particular in relation to balancing charges on sale and disposal rules. The period of application of this relief is slightly shorter. That's from the 1st of October 2021 to the 30th of September 2026. Next is the employer's NICs. Now, this takes the form of a proposed 0% employer's NIC rate on new employee salaries of up to $25,000 per annum, with that 0% rate being applicable for 3 years. To qualify, the employee must spend at least 60% of their working hours in the tax site. Now, this relief isn't proposed to start until April 2022, so next year, and will be applicable for up to 9 years. The government have said up to 9 years since there's a proposed government review of the relief, though there won't be a review of that relief before April 2026, so the relief should apply for at least 9 years. Finally, in this respect, there is business rates relief. This is going to be a relief of up to 100% of business rates on some premises within Freeport tax sites. It will apply in full to new businesses and relocating businesses, and may be partially available to businesses already within the Freeport tax site, and that's where they're going to expand into new property, expand their existing property, or expand into an unused part of existing property. And it will only apply to existing occupants of Freeports where the rate increase associated with such expansion can be reasonably ascertained. Now, this is going to be available from the 1st of October this year, and will apply for 5 years from the date of receipt of relief. In order to get those 5 years, you have to first be in receipt of the relief before the 30th of September 2026. Another important restriction here, where there is a choice to claim relief either under the rules for enterprise zones or under the Freeport rules, the business in question has to elect for one treatment or the other. You're not eligible for both. And so just one more point to note. All 8 of the designated Freeports are in England. There aren't any in Scotland, Wales and Northern Ireland yet, though there may be. If there are Freeports in any of the other nations, devolved powers in relation to SDLT and business rates may mean that relief in those respects will differ. So just be careful, as always, to check the relevant legislation. So while details of legislation remain unclear, both the policy drivers and the bones of the applicable benefits are clear. And it should be the case that for certain businesses, establishing in a Freeport could be highly beneficial, particularly if done quickly, in order to maximise access to those reliefs. And this brings me to the second point that I mentioned above. Where are the Freeports? So the 8 which were announced at budget were East Midlands Airport, Felixstowe and Harwich, Humber, the Liverpool City region, Plymouth and South Devon, Solent and Thames and Teesside. So there are Freeport areas all over the UK, and those benefits will start to kick in from next month, even though we don't necessarily have all the legislation just yet. And finally, I want to make one point that I think is important. Freeports have been essentially advertised as having been made possible by us leaving the EU, and that has certainly at the very least facilitated their introduction. The reason for this is that the Freeport measures may amount to state aid or to a subsidy. So just because we've left the EU, this doesn't mean that there are no state aid rules or subsidy rules that might affect Freeport measures. And measures to keep an eye on that could cause changes here are any future UK domestic subsidy control regimes, the UK's subsidy control obligations at the WTO, the state aid obligations under the Northern Ireland Protocol, and all of the subsidy control provisions negotiated in any UK free trade agreement, and that of course includes the Trade and Cooperation Agreement with the EU. So in short, the Freeports are potentially going to be a really interesting time for the UK, both in terms of developing business and in terms of taking advantage of those new reliefs. However, there could also be an interesting time for tax law. Thank you for joining me.